Institutional money is building entire neighborhoods that are trying to compete with you as a single family landlord.
Yeah, so let's talk about what institutional money is, because I think a lot of people know, but it's probably worth mentioning right out of the gate. We're talking about money that you guys put into Wall Street, right? It could be through a pension fund, could be through a life company, it could be through a 401k, a retirement, any kind of retirement vehicle. Could be BlackRock, could be Goldman. It doesn't really matter. But what they've been doing since 2008, as you guys all know, this is a hot topic. They've been getting into the rental market space, right? And it used to be kind of, used to not be. Even Trump came out at Davos recently and said he's not for it, right? He's creating legislation to fight against it. But the reality is they're here, right? And the irony is that they've already been funding home building for all these years. And so some of you might think, oh, why am I talking about single family home building? Well, if you look at a company like Lennar or Toll Brothers or whatever, some of these big ones, that's institutional public money. They're on the stock exchange, so okay. So they are a public company. All right. And so why bring that up? Because what they've done, you think about the process is the same. They go out and buy a piece of land, and they have two choices. Choice one, I'm going to build 3 models. I'm going to sell this out. I'm going to build the roads and infrastructure and all that stuff. And I'm going to sell these off. And at the end, I'm going to own nothing. I'm a home builder. Okay. Option 2, I'm going to buy that same land. I'm going to build all of these homes and I'm going to rent it. So big companies like this have been and are doing this. They've actually gotten in to the multi-housing space. Now, we're going to talk about build to rent, I know, but it's important to understand that the big institutional money is making its way into this space, both through the home builder, but also funding smaller build to rent companies, right? Because there's this build to rent thing has been around for a little while, and it's really, really interesting. There's single story, small units, some with garages, some with not, small yards, but the key here is they're single story. And typically they're on the edge of town or the land's a little less. But it's really creating and making a huge wave in the rental community because they're new. They're basically like patio homes, and people like them.
It's important to note when you said that Trump was getting involved in Davos as far as trying to limit this, he's trying to limit them from buying existing homes, but he's not trying to limit them from building.
Build to rent, right?
So what's so unique about build to rent is they're building entire neighborhoods, and these neighborhoods are just like these luxury apartments. They have amenities, they have pools, they have dog spaces, dog walk spaces. They have trails. Sometimes they have pickleball. So there's a lot of amenities that are offered here. And, that's hard for us single family landlords that don't have any of that, especially if you're not in an HOA and you don't have a pool. It's really hard to compete with that.
Yeah, it's this little niche has taken off. It's been taken off for a while. Ironically, it kind of started out of the Phoenix area. So I knew some of the early pioneers doing this. It was super popular, right? Because when you drive into an apartment community, like let's say one that Ross and I build, you're looking at a 2 or 3 story. I mean, we have some that are 4 stories with elevators, and they're typically, I would call them dense. Dense means you're trying to get as many units on 1 acre as possible. And in Phoenix right now and around the country, it just depends. In Phoenix, you're at maybe 16, 17 per acre, which means that you're 2-story. So you guys all know, you've probably driven to these. You drive in, your clubhouse is straight in front of you, you park, and you look around and you've got 2- and 3-story apartments. Well, what happened is a lot of times to accommodate the zoning, if you're building in a neighborhood, the zoning would maybe say, hey, you can build apartments here, but we want single story on the perimeter of this property. So Ross and I built one like this. We built a 200 unit property like this in Goodyear, Arizona, where on the entire perimeter, we had a single story build to rent. And then on the inside, basically across the street, we had 2 and 3 story. See, because we're trying to increase density. Because if you're going to build on, let's say, 15 acres, why wouldn't you build as many as you can? So this is a little bit different, where it's literally, to Daniel's point, these are neighborhoods, right?
Yeah, and you have to understand the why around this. So the why around this is because typically renters were in their 20s and 30s. Now renters are, people are not buying homes. So a lot of these same renters are in their 30s and 40s, and they start to have kids, and they start to have animals, and they start to want yards, and they start to want their own space, and they maybe want a garage. So that's because the renter base is changing, which is what is creating, build to rent is becoming more popular because truthfully, homeownership is out of reach for a lot of people. But to Ken's point, because they're only building single story and because they're only building single family, the numbers still have to work. So that's why a lot of these build to rent communities are not in your city centers. They're kind of on the outskirts where they can get cheaper land.
Yeah, so you got to think of it. If you're a single family landlord and you're buying, let's say, fix and flips or whatever, you're probably in the 1,500 to 2,500 square foot range would be my guess. And maybe you keep some of them, maybe you keep all of them, maybe you don't keep any of them. But whatever the case is, whoever is the end user and is renting them, not necessarily moving in to be a primary homeowner, you're competing against these build-to-rents, and the build-to-rents are not 2,500 square feet. And, you're trying to get 6 to 8 per acre, and so what you're really doing is you're building single story, sometimes garaged units that everybody's living in, and with different access points. So it's quite different than a single family home on a quarter acre, half acre. What they're doing is they're maximizing the density on the acre, trying to get as many units as they can, but generally they're single level. And so given the choice, a homeowner, let's say, they can live on a quarter acre at let's say a 2,000 square foot, or they can go to this build to rent community at, let's say, 1,400 square feet. So a lot less, but brand new, with a single car garage, let's say, a small yard, but they have this amenity package, right? And the amenity package has the clubhouse, it has a fitness center, it has a pool. So they're really going after, more than anything, the single family landlord.
And now a word from my paid sponsor, PadSplit. Look, if you've been trying to make single-family rentals pencil out in this market, you already know that the math can be tight. With high rates, properties that would have cash flowed 5 years ago now often break even at best. So what do? You wait on the sidelines and miss out, or maybe you find a better model? That's why I want to talk about today's sponsor, PadSplit. Here's an example of the math in some markets. A 4-bedroom renting for $2,700 as a traditional rental may be able to gross over $6,000 a month in a co-living setup through PadSplit, depending on location, occupancy, and costs. The same house can potentially more than double the gross revenue in the right market. And before you think, that sounds like a headache, PadSplit helps with member screening and rent collection while still allowing you to operate the property and make management decisions. This is one strategy investors use to try to make deals work when traditional rentals don't pencil. If you want to see the numbers for yourself, go to padsplit.com/hosts. I'll have a link in the description. Just run the math on the property you already own and see if it's a fit. You might be surprised.
So why we're bringing this up and why I think it's important as a single family landlord, we have to think, how can we compete with build to rent? Because that is really something that is coming our way that we do have to compete with. And I think that, you really have to, I think a lot of us, we've gotten really complacent over the last 10 years where rents kept going up. We didn't really have to do much to the unit. It was easy to keep it occupied. It was okay if it was super dated. It was okay if it, didn't have all the new smart features. And I think a lot of that, like, there's some stuff you can't do, but I think a lot of this interior work you can do for not that expensive, and you should do, because that's what tenants are expecting.
Yeah, obviously, this is going to force a lot of landlords to upgrade their existing places if they haven't already. I think The interesting thing is that this is a niche, right? You're going to take away from guys like me that have a 2-story walk up, or or kind of in a dense area. And you're going to take away from that single family landlord. But this is more of a niche, because I know personally, and I'm sure a lot of you guys feel the same, I particularly wouldn't want to live in one of these places. That's just me. Like I personally want my privacy. I want a little bit of land. I want, let's say, a pool in the back. I want a place to be able to let my dogs out, sit on the porch, have a little bit of room. That's just me. So there's a so but you are competing, right?
But you're not really the demo for Build to
No, I
Rent.
know.
So
But there's a lot of people though that want a 2-car garage or a 3-car garage, right? Because they have toys.
but not really renter. I wouldn't say a lot of
there's
renters
a ton of renters.
need a 3-car garage.
Dave, I was talking to Jason Hartman yesterday.
Okay, well, Jason's a specimen of
Still,
a renter.
okay, I just gave you an example. You can't just discount it. And he's renting, and there's a lot of, we are renting right now. You and I.
We're
okay,
right.
because why? Because we got a flood in our house. But the point is, there's a market, and there are different kinds of people that rent houses. Let's just put it this way: if there weren't build-to-rents, who would be in those other homes? Are you saying it's one or the other? Are you saying that because there's now build-to-rents that the single-family homes are going to be vacant?
No, people will move
Yeah,
into them.
me too.
I just think that it's always a different renter. Like, I think your Build to Rent is going to be more your budget conscious person that wants a single family home.
Well, you might be surprised. It's not necessarily a budget. In some cases, it might be almost the same. What they're doing is they're getting a smaller unit, but brand new in a community with amenities. These aren't discounted. The ones I've seen, I've been to plenty of these.
Well, they're not discounted, but they are usually out of the city center.
Oh,
area.
yeah. No,
So
the location
typically,
for
yeah.
sure. I mean, you can't build these in the middle of town, right? Because you need the land, right?
Mhm.
So the land, if you want to be in the center of the universe, and a single family, you're not going to be going to these build-to-rents. But if you're on the edge of town, given the option, if you're going to drive up to a 2-story apartment community on the edge of town, or a single-level apartment community, the build-to-rent's going to win every time, right?
It is, assuming the price, right? Assuming
Yeah.
the price is the same. Yeah.
Yeah.
I think what's interesting though, and I think the biggest advantage us smaller landlords have, if we have places in good areas, is because we're closer to the city centers. But who I think is going to really get hurt on this is maybe the smaller landlords that have places in the outskirts, and maybe they bought places more in the outskirts because it was cheaper and they felt like it was going to be a better deal for them. But now trying to be a single family landlord competing against these large communities, if you don't have the location on your side, is going to be very difficult.
Yeah, I think this also, if you look at it, the single family house is going to have somebody in there longer. The build to rent is always going to have a little bit higher turnover. It's going to be a little shorter term. The single family house is going to win generally for the person that's looking not to buy, right?
Right.
And so if you're here temporarily and you don't want anybody above you, I mean, this is really a lot about privacy and having some amenities and maybe a little bit of a community. But there's plenty of people that don't want anybody around them. Like they don't want a shared wall, because these are shared walls, right? There's plenty of people that are, that will want these, and there's plenty of people that will absolutely not want these. And I would say that the person who's renting, let's say a 22,000 square foot Rambler somewhere, is not your ideal rental candidate, because they're gonna, I've seen, trust me, we've had plenty of these houses. They've got multiple kids, they've got a yard, they've got stuff set up in the back, they do their barbecues, they've got their garage full, they got husband and wife, they got 2 cars in the garage. That's, you're not gonna take that person, right? That person is always going to have a place where they want space, and most of the time they're going to want to be close to the school system, wherever their kids go to school, etc. And then again, these are on the edge of town. The interesting thing is, as you guys all know, towns grow, towns continue to grow, call it urban sprawl, call it whatever you want. At some point, 10, 15, 20 years from now, these are going to be incredibly well located assets. Right now, they're on the edge of town because that's where it's cheapest to build them. But and so and they're doing pretty well right now, actually.
Yeah, and I think what's interesting about this and what you should take away from it is that tenant expectations are changing. And part of that is because of these luxury multifamily. And then the other part of that is going to be from these build to rent communities. And I think as a small landlord, you have to really embrace that. And so some of it is aesthetic. Some of it is like a lot of these smart systems like keyless entries, smart thermostats. What else do you guys do in your
That's all,
luxury
yeah, and that
apartments right
stuff's
now?
all coming anyway.
Yeah.
We're even if you have stuff that's 30, 40 years old, the industry's moving that direction. So the way you got to look at that is anything that starts in a custom home, then makes its way into a semi-custom, then it makes its way into production homes, and then it makes its way into apartments. Like, and what happens is the technology gets a little bit better, a little bit cheaper, a little bit more easy to access. So we're doing all that stuff. We're talking about Ring doorbells. We're talking about the stuff for Amazon, the packages. We're talking about the water monitoring systems, the thermostat, everything with your smartphone. That's all already in the apartment community. Certainly, if you're building them, you're putting those in. But there's a bunch of retrofit. There's a huge, huge market actually doing. I actually invested in a company that's doing this like 3 years ago, they're basically hitting all the properties that are old, and they're updating them because the people want what they want, right?
Well, I think there's selling points. I think that, having that thermostat that you can control from your phone is a selling point. I think having a Ring doorbell is a selling point. I've gotten rid of my keyless entries. I had that for one property because it came with it. And it was just a nightmare
Yeah.
because the battery dies. They never have a key. I had one tenant from, I don't know how this happened, but trying to change the battery, like broke the whole thing. And we had to get, a whole locksmith out. And so I don't do the keyless entries personally because I find it to be too big of a pain. But
I'll
everything
challenge
else,
you on that one because I can't disagree. The thing is, I don't think of it as a selling point, actually. I think that the companies say it's a selling point, but here's what it is. It's the difference of whether they rent or not. Right?
yeah,
I guess you can call that a selling point,
right,
but to me, it's an equalizer. Like if you
yeah.
don't have it, then you actually lose occupancy. So could you call that a selling point? Maybe, but I call it that, the market, the standard for the market is now those things. The one thing that I would challenge you on the keyless is we're starting to see services. Now think about this. We actually have some at our own properties using keyless, and here's how they use it. You don't need a person there. So think about this. Just wrap your head around this. You can make an appointment on the app and say, I want to see, unit 102 at 7 p.m. There's no one at the office. It might even be unmanned. The person registers with the app. They go show up. They hit the keyless entry with the code that they get from the company. They walk in. They see the actual unit that they can rent, all completely unmanned. And the whole thing is done, basically using AI and technology. And then now the risks are, but we haven't seen it yet. Who are they? Is there damage? All that kind of stuff. But we're moving toward an unmanned rental choices already. We're starting to see it. We actually have properties already rolling this out. And so why would we do that? We would do that for a couple of reasons. One, to fill vacancies, clearly. Two, you can't staff a property 24/7, right? People go home, right? They want to go home. So oftentimes, you guys know, a rental office will get closed. Okay, so if all that happens, and let's say you work from 9 to 6, and you don't have any time except for the weekends to go look at a place, you can actually make an appointment at 7 or even 8 p.m. and show up at a property and literally, without any assistance using this service, go actually look at the unit that you might rent. Now, it's appointment driven. Obviously, there's, but you need the keyless entry. So this is where technology is headed, and so it's going to be very interesting to see how far it goes.
I mean, I wouldn't feel comfortable doing that personally. Like what we do is they can have their own realtor, and then we just pay the realtor to show the place so that we don't have to meet them and they can kind of go whenever. And realtors have special lock boxes that they use. I just wouldn't trust people that I don't know
Oh,
to see the
totally.
unit.
Yeah.
But the other thing
I don't
too.
think it matters whether you trust it or not. That's where the industry's headed.
Yeah, and I think it's easier on multifamily because you have cameras and there's one building versus small single families where then they just have access to your place and you don't know what they're doing and you don't really have the same technology.
We'll see.
But other things that landlords can do is with online payments. So I've seen a lot of this when I work with clients. I have clients that still take checks. I have clients that, you have to do Zelle. And I think a big thing with clients is they want an ease of payment. And I think it's important that they're able to put their rent on a credit card. And I know it's not a smart move, and I know it doesn't make any sense to you, those listening, but I think it's a good option for tenants to have, and tenants do use it. So that's why I like using Turbo Tenant or something. But I think, paper checks, like kids don't even have paper checks anymore. If you have a renter below the age of like 30, they don't even own a check. And then it's just too big of a production. You're making it too hard for them to pay you. And I think that that's a really big issue kind of moving forward.
Yeah, well, we've been way ahead of this. Yeah, we
Mhm.
do everything ACH, period. And we don't take cash. And there used to be a time when I started in the business where they actually took cash, believe it or not. I mean, I remember literally, I would have 30, 40, $50,000 of cash that I have to go to the bank. And we had these floor safes and everything. The industry's, completely automated now for auto pay, right? Auto deduct, auto pay. And that's the only way to go, in my opinion.
And I think the maintenance issues are going to be a thing too. So when you're in a build to rent community or you're in a luxury apartment, obviously you're going to get faster maintenance because they have full-time maintenance people on. And I always deal with this when I have tenants that come from the luxury apartment world into the single family world where, yeah, it might take us 4 days to have somebody come out and, fix your appliance. Not everything happens that day or the next day. And so that is something, though, that it is good to strive to get better at. But at the same time, that is something that we are competing with because we just don't have the resources to send somebody out the same day without paying all these emergency fees.
Yeah, I think that it depends on the size, right? So if you have a 50 unit build to rent, you're not going to have a maintenance person. Even 100, you might not. So, as you get into the larger ones, you clearly can support somebody on property. But to your point, these are new, so it's really important to understand that there's, you don't have the calls that you would on something that's, a 40-year-old home. Like you just don't. So, so you don't really have the maintenance issues as much. And if you do, to your point, if you're a single landlord with 2 or 3, then you have what you said. But, we just did our boardroom recently here at the office where we had, 22 real estate owners come in. They all had 100 to 400 single family houses, a lot of them. They have whole systems, whole maintenance people, people that's what they do full time. So they don't have that emergency call stuff because they have somebody on staff. And there's always something somewhere. So size does matter, when you start to talk about maintenance. But to your point, and the builder rents are generally, this is a new concept. So think about anything, if you ever lived in a new home, the whole point of living in a new home is that you don't have a lot of stuff going on.